Some other the cash sources or funding sources that businesses could think about. Number one, there's non-traditional lenders out there that are still lending. So lenders that are more interested in your story as a business and your background, your history, how you approach customers, your customer relationships, long-standing relationships. Those are all factors in underwriting, whereas in traditional underwriting, those really wouldn't be qualifying factors. So there are storybook lenders out there. Caliber has relationships with storybook lenders that we refer clients to when non-traditional lenders fall down. There is asset-based lending. So it's something to think about as a manufacturer, specifically manufacturers. If you have equipment or other things that are sitting around, you can lend against those assets that you have. Now, right now, it is a little bit of a competitive market, or I would say a fire sale market in the asset-based lending space. So you may not get the premium that you're expecting on that equipment that you have, but it is an option for another cash source or funding source. Another area that people don't often think about is their deposits. Oftentimes companies, especially privately held companies, they do have cash on hand. They do have operating cash on hand. And there's two sides to this coin that companies often don't think about. Number one, FDIC insurance. So most people, they may have known at one point, or it may have crossed their thoughts at one point, but they may not be thinking about this. FDIC insurance only goes up to $250,000 per account. So that creates a challenge if you, as a privately held company that is, let's say, $100 million in revenue, let's say you have $10 million in your operating account that's kind of your average balance. Well, of that $10 million in that one account, the likelihood is that only $250,000 of that is insured. And especially in the times that we're dealing with right now, it's really important to think about that, because that could really crimp your cash flow if something happened with your bank and you were only able to pull back $250,000. So there are services that many banks have, additional services that are depository insurance platforms. We work with some partners that have, one partner in particular that I'm thinking of that has over 500 banks that they aggregate the deposit over. Not only do they secure that funding up to those deposits up to 70 million, but they also give a better return. So right now, the market is kind of fluctuating. 3 or 4 weeks ago, the returns were about 1 basis point. Now, the returns from this platform, or at that time, the returns from that platform were around 0.25%. So when you think about it, if you're depositing $10 million and you're only getting 1 basis point back in interest versus putting on this platform and getting 0.25% back, it's a way to gain cash flow. It's a way to put money back into the organization. Another opportunity to get cash or to gain cash for a company is invoice factoring, or I would say invoice factoring adjacent solutions. And these just work on the kind of aged AR that you have sitting there. You can lend against that. You can lend against your receivables and the invoices from your customers. And there's a myriad of different solution sets out there. We work with 2 or 3 in this space that we think are reputable, but it is just another option to look at when you're looking at how to access cash in the business.